Good afternoon, Mr. Nanda Vitamela and friends. In this opportunity, we want to present our material that discuss about fiscal reconciliation. Before we discuss about our material, I want to introduce our group members. There is me, Albert Wilfred Nathanael, Jelita Mianarta Raja Guguk, and M. Raditya Dito Pratama. Fiscal reconciliation is one way to watch the differences contained in commercial financial statements compiled based on the accounting financial system with financial statements compiled on the basis of the fiscal system. In addition, reconciliation or fiscal correction can also be interpreted as a taxpayer step that matches financial statements. If there is a difference between commercial statements based on SAK or accounting financial system and financial statements based on the fiscal system. The nature of reconciliation. 1. The implementation of bookkeeping based on the company accounting policy is different from the taxation provision. 2. Differences arise related to the recognitions of income and expenses in the income statement or differences in the concept of income. 3. Adjustments are required to calculate taxable income from accounting profits that the company has reported. Background difference. Accounting and taxes are set by different authorities and with different purposes. The difference between accounting and taxes not only occurs in Indonesia but also occurs in other countries. Tax research related to book tax gap. 1. What causes of book tax gap? 2. What are the consequences of book tax gap? A. Profit persistence, return persistence, information value of book tax gap. And 3. Whether book tax gap can be considered as a tool for earning management. Commercial accounting or financial accounting is the process of preparing financial statements in accordance with financial accounting standard regulations. Meanwhile, tax accounting is the process of preparing financial statements in accordance with tax laws and regulation. Different adjustment steps. 1. Accounting income. 2. Plus unrecognized earnings. 3. Deducted income that is not a tax object. 4. Add non-deductible costs. 5. Deductible fees that have not been charged. 6. Deducted income is subject to financial PPH. 7. Plus the cost of 3M final income. 8. Taxable income. 9. Calculate the current tax burden. And 10. Record deferred taxes. Trade-off accounting tax. On the accounting side, it is profitable because it will attract potential shareholders. Public companies will prioritize these interests. On the tax side, it is not profitable because it increases the tax burden that must be paid. Reconciliation item details. 1. Income is not a tax object based on Article 4, Paragraph 3, Income Tax Law. A. Religious aid or donations are mandatory. B. Grants are received by families, religious, educational, and social organizations. Legacy. C. Assets as a substitute for equity participation. Nature. The insurance claim is accepted by the WPOP. D. Dividends from retained earnings on ownerships is more than 25%. E. F. Contribution received by the pension fund. G. Investment income by the pension fund. H. The share of profits is received by the members of the partnership. I. The profit share is received by the venture capital company or scholarship. J. The rest is received by non-profit educations or R&D agencies that are reinvested. Assistance paid by BPJS. 2. Non-deductible expenses. Article 9, Section 1, Undang-Undang PPH. A. Profit sharing. B. Fees for personal use. C. Establishments of reserve funds except for certain businesses. D. The insurance premium is paid by the WPOP. E. In kind, except as a result of work demands or food for all employees. F. The amount exceeds what is reasonable for a special relationship. G. Granted property, favors, or donations other than those excluded. H. Income tax. I. Fellowship members' salaries. And the last one, administrative sanction and tax crimes. Number 3. Income subject to final based on PPH Article 4, Paragraph 2, Income Tax Law. A. Interest on deposits, savings, bonds, and government bonds. B. Interest on cooperative saving received by WPOP. C. Lottery prize. D. Income from stock transactions, securities, and other equity investments. E. Income from the transfer of land and or buildings. F. Revenue from construction and real estate services. G. Land and or building rental income. H. Other certain income is regulated by income tax. For the next point will be continued by Jelita Mianarta.
Okay, I'm Jelita Mianarta Rajagogu. I will continue. Reconciliation technique. Reconciliation is done by making a taxable income statement from the accounting income statement. All are accounting adjusted with correction to get the value of income or expense according to fiscal. This method is right for tax purpose, and correction are made by adding or subtracting the correction value from the profit before tax. This correction technique is presented in the note to the financial statement. In the practical world, the reconciliation technique is mostly used for the purpose of filling out the SPT, but in the presentation, in the note to the financial statement, it used a positive or negative correction technique for profit before tax. Next, fiscal reconciliation techniques are carried out in the following ways. First, if an income is recognized according to accounting but not recognized according to fiscal, reconciliation is done by subtracting a certain amount of that income from income according to accounting, which means reducing profit according to accounting. Second, if an income is not recognized according to accounting but recognized according to the standard, reconciliation is done by adding a certain amount of that income to the income according to accounting, which means increasing profit according to accounting. The third one, if a cost or expense is recognized according to accounting but not recognized as a reduction in gross income by fiscal, reconciliation is done by remanding some of this cost or expense from the cost according to the cost, which means increasing profit according to accounting. And the last, if a cost or expense is not recognized according to accounting, but recognized as a reduction in gross income by fiscal, reconciliation is done by increasing a number of costs or expense mentioned on cost according to the law, which means reducing profit according to accounting. For case and illustration, PT Archegum is a company engaged in wholesaling and retailing for the business customer segment and the final customer segment. The company keeps books of account related to its accounting activities. The following is the data obtained from the financial statement of PT Arte in 2012. This is the following data about the financial statement can be seen from this slide. I give a friend time to see it. Total marketing cost of 8,307,840,000. And this slide shows the operating profit of PT Archegum is 3,078,198,000, while the profit before tax is 1,707,500 3,000 rupiah. The following is a description that explains the details of the various elements contained in the financial statement of PT Arctic. Because a lot of information of financial statement you can read by yourself. I can give you time to read. For the next, we'll continue by M. Radityo Dito Pratama.
Explanation. The correction is positive. The cost of telephone, water, and electricity cost in marketing equals to 50% director's credit fee plus PDA purchase that should be capitalized equals to 50% times 400 million times 400 million equals to 50 million plus 100 million equals to 150 million. Depreciation in the field of marketing according to accounting equals to 20% times 25 million plus smartphone depreciation plus 6 divided by 12 times 50% times 100 million equals to 5 million. Fiscal depreciation of marketing sector 50% times 25% times 25 million plus smartphone shrinkage plus 6 divided by 12 times 25% times 100 million equals to 3,125,000 plus smartphone depreciation plus 12,500,000 equals to 15,625,000 plus smartphone depreciation positive correction of shrinkage in the marketing field equals to accounting depreciation minus fiscal depreciation equals to 30 million plus smartphone depreciation minus 15,625,000 plus smartphone depreciation equals to 14,375,000. Positive correction of office rental fees equals to proportion of prepaid rent equals to 18 per 30 times 1,633,500,000 equals to 980,100,000. G&A field depreciation by fiscal equals to depreciation of commercial vehicles plus depreciation of directors' vehicles equals to 12.5% times 6 billion times 50% times 3 per 12 times 12.5% times 2,400,000,000 equals to 750 million plus 37,500,000 equals to 787,500,000. The old factory building is not depreciated according to the fiscal because it has passed the fiscal useful life of 20 years. Positive correction on the G&A field shrinkage, accounting depreciation minus fiscal depreciation equals to 1,254,000,000 minus 787,500,000 equals to 466,500,000. Positive correction of royalty fees equals to PPH 26 expenses that should not be charged equals to 20% divided by 120% times 660 million equals to 110 million. This is the income statement. Positive correction of dividends from Bremen AG equals to foreign tax burden that should not be netted equals to 30% per 70% times 276,500,000 equals to 118,500,000. Deposit principal equals to 100% divided by 80% times 34,280,000 per 8% equals to 535,625,000. Loan principal equals to 100% per 12% times 76,275 equals to 635,625,000. Loan interest that can be charged equals to difference between loan principal and deposit principal times loan interest rate equals to 635,625,000 minus 535,625,000 times 12% equals to 12 million. Positive correction of loan interest equals to interest on loans according to accounting minus interest on loans according to fiscal equals to 76,275,000 minus 12 million equals to 64,275,000. And this is it. Thank you for watching. Thank you for the attention. Assalamualaikum warahmatullahi wabarakatuh.